Yeah, so feel free to keep your fingers on the chat box. And I have a small request for all of you. I hope you've all logged in from your laptop. So I have documents to be sending over to you, and some files. And if you do, then please pick up a piece of paper and pen if you can, because there's going to be a lot of activity. So without much ado, welcome to the 8th monthly meeting of the 10 crore leagues. And I'm so happy to see a lot of known faces who've been around for a long time. How about you guys tell me, how has the journey been for you? We started, I think, in October of last month, and last year, and we've been meeting almost every month. Anybody here who've been around for all the sessions? Hi, Satya.
So, yes, I have been there for from the time we started. It's been great sessions.
Yeah, yes, I have been there for all the sessions. Yes. This is my first. Amar said this is his first. Great. Excellent. Okay. So for those of you who come, we have a lot of content packed in for today. So I'm not going to waste too much time. We're going to be doing some quick run on session. So all of you, please stay alert. And keep away distractions, because today is going to be a very interesting content. A lot of effort has gone behind it. I have some surprises as well. So before that, let me introduce the 10 crore league. So for those of you who are new, the 10 crore league is a community of like-minded individuals who come here with the single objective of building wealth, doing the right thing the right way, so that they can be a blessing to their family, their community. So my simple request is, in case you're not talking, please put yourself on mute so that we can all enjoy the session. Yeah. Hi, Jacob. Yes, so that's 10 crore league for you. And there are some principles we live by in the 10 crore league. And most of you are aware of this. You can read it aloud with me. It'll make a lot of sense for those of you who come in new. So so some principles we think will take us. So if we want our money situation to change, then we have to change some living principles, some life principles that we follow here in the 10 crore league. Spend intentionally. Okay, say it along with me. I spend intentionally. In our family, we work as a team. I save like a pessimist, but I invest like an optimist. I keep my promises and reach my goals. I eat healthy, exercise, and take adequate rest, because it's important that I keep this money for my family and my community. I take responsibility for my decisions and my destiny. My children are responsible with money. In case they inherit this money, they're very responsible with it. I'm filled with gratitude for whatever I have, and I give generously without any expectations. So these are some principles, some ethos that we live by here, not just here in this league, but also in life generally. Because we think the right behaviors will attract the right kind of wealth, right? We also know that the 10 crores is possible for everyone. It is not just for a select few. Anybody can get wealthy if you follow the system. There is a process to it. There's a method to it. All that you have to do is be disciplined with the process and follow it with faith. So the 9 foolproof steps to 10 crores, most of you know this, is the step 1 is to get your first 1 lakh in cash for emergency. Step 2 is to purchase your basic insurance system, health, disability. So doing your risk management. Step 3 is you pay off all your loans except the home loan. So we don't do credit cards, we don't do car loans, we don't do personal loans. Here, the rich people don't do loans, we don't do loans. Step 4 is we create a 6-month emergency fund, and that gives us the courage to do what we want to do with our careers, with our time. Step 5, we start investing regularly for our retirement, at least 15% of income. Step 6 is we build for the children's education. We build the children education fund if you still have children to be educated. Step 7, we attack the home loan and pay it off in full. And step 8, we focus on the 10 crore target, which is on the investments. And step 9, we create a generous giving plan. And that is how we create wealth and we remain a blessing to our families and our communities. Right? So thank you very much for coming in today to the 8th monthly meeting of the 10 crore league. And today we have a surprise package. I didn't tell you about this, and it was not floated in any of our messages earlier, but the first part of the session, as I told you, Money Believes, is to be conducted by a guest, Mernosh Randeria. He's a very well-known name in the NLP practitioner segment, and he's the most accomplished person I know in the financial services and in the coaching side of business. So you can look up, what all he has done. He's a chartered accountant, Costworks accountant, master's in financial management. He's got a diploma in international financial reporting standards. He's also a certified financial planner and a chartered wealth manager. Okay, that's all his financial background. Apart from that, he's also a certified coach. He's a certified trainer of NLP. He's a certified brain I will facilitator and a whole lot of stuff. Now, this itself is going to take a lot of time. So you can see how accomplished Mernosh is. And he's also my teacher. While I attend NLP classes, he's teaching me. He's my guru. So I'm so glad, Mernosh, that you agreed to come today. And if you can start with some background about why we're talking about money beliefs and why it's important in this context, that'll be awesome. So all of you, please welcome Mernosh, and I'm going to leave you with him. Mernosh, I'm right here, and please feel free to reach out in case you need anything.
Thank you, Bhuvna.
Mernosh, are you there?
Yes.
Thank you.
Thank you.
So I'm stopping my, and all of you can say hi to Mernosh. He's awesome, and I'm sure you're going to love it. Okay, Mernosh, so 45 minutes, here we go.
Okay.
Yes.
Welcome, everyone. Good afternoon. So we are here in the 10 crore league. Yes. And
Yes.
what we are looking at is about building our investment philosophy. So you've come here with that intention, with what Bhuvna has stated, that you need to have some kind of philosophy, some kind of planning statement that tells you that what you need to invest in where. Now, before we even get there, the journey is not just about having that final statement. What is important is that how can we create a blueprint for ourselves that helps us to, that takes us to the wealth that we want to build. Now, if we have to create a blueprint, what is required? If we have to create a blueprint of a building, what are the things that are required for that? You can type in the chat box.
A design.
A design, yeah.
Materials.
Material, yes. A visual, an execution plan, requirements, yes. A proper planning, a plan of approval, yes. Team, timeline, architect, okay. Guidance, time period, okay. Now, as we prepare this blueprint, we need to also know that what is the design, the layout and everything. And also that becomes the foundation of what you are building towards. Yeah, dream of how things need to be built. Yeah, that's what Raj is also saying. So you need to have a foundation that lays out that firstly, your structure, your building which is there, it is on the right kind of grounds. It is based on the right kind of design and layout. Now, when it comes to creating an investment philosophy, a plan, what do you think could be the basis, the foundation of that? What do you think would be the basis of the blueprint or that strong foundation on which you can build your plan?
Good soil.
Good soil, yeah.
Strong materials.
Strong materials, yes. So in case of our investment philosophy statement, what do you think are these? Good soil, the right material, the right blueprint? What will really help? Protection first, okay. What else? Strong foundation, yeah. What is the foundation that is needed the most over here?
The right mindset to attract money, right?
Yes, the right mindset. It all starts with the mindset. I mean, do you know people who are striving to become rich, to grow their wealth, and at the same time, they have some kind of belief or some kind of a mindset that does not help them to become rich. Although at a conscious level, they're putting all the efforts, they're taking all the actions, and still they are seeming to be struggling with it throughout their life. What do you think happens over there? What is that thing that needs to be fixed, and use that word? Yes, the money beliefs. Yes. Maybe the actions are not in alignment. The actions are there, but they are not in alignment with something else. And at the conscious level, the person thinks that I'm sure I'm going to do this. I want to make it happen. I want to become rich. I want to grow my money. I want to double my money. I want to earn as much as I can. I will invest in the right ways. But somewhere, something happens that does not help them achieve their goals. And this is not in the actions. This is not in the plans that they put in. It goes back to the beliefs that they have about money. Yeah, deep-rooted belief from childhood. Yeah, Vivek. So I had a friend who was working on his growth. I was also advising him as far as investing is concerned, and he was also actively working on his business to grow more money. He had a goal of becoming rich, but somewhere it just didn't happen. I mean, he would take all the actions, but he couldn't achieve. Either he ended up spending it somewhere in the wrong places, or he ended up making some losses. And he realized that this was happening because going back, way back to childhood, his parents and his upbringing told him that, rich people are greedy. Rich people are corrupt. Money is the root of all evil. Yeah. So although he believed that he needed to have money in life, these so-called beliefs, these so-called principles that he had heard way back in his childhood was somewhere messing up with his growth, somewhere coming in the way of taking his actions or achieving the results that he wanted to. So let's understand, as we begin, let's understand that, what kind of money beliefs can be there, which can actually come in and sabotage your efforts and stop you from getting your results. Okay, for this, we are going to do a quick activity. Everyone ready for some activity, for some action?
Yes.
Yes. So Bhuvna is going to share an Excel file in the chat box. I want you to download that. Okay, in that Excel file, there are around 72 statements. So take your time. We'll take around 5 to 10 minutes on this. Take your time and go through each of the statements. And if I were to ask you to kind of rate yourself on your agreement with that statement, rate yourself where 1 means that you completely disagree with that, and 10 means that you 100% agree with it. Okay, I'll also share that.
I've shared it.
Yeah, I've shared in the yeah. So you can download it from the chat box in Zoom. And this is what it looks like.
I'm also sharing it on the WhatsApp group for those people who can only download from WhatsApp.
Okay, great.
I can share it.
Yeah. So here, money is the root of all evil. If you believe this to be true, then you put in a 10. If you believe 100% to be true. If you believe aadha true hai, you put a 5. If you don't believe it at all, then put a 1. If you believe somewhere in between, yeah, it's a 7, put a 7. So like that, go through each of these and put your rating against them, against each one. Don't overthink. And also one more thing to be cautious of as you do this. Do not put the rating as what you think it should be. Okay, this is very important. Put the first rating that comes to your mind. It's nothing about right or wrong. We are not judging each other over here. You're not even going to share it with us. It is just what you think in your mind is true about it. Just put it there. Rating definition again, yeah. So if you agree with it, 100% agreement is 10 and 100% disagreement is 1. And anywhere in between. So if you feel I somehow somewhat agree, 60% agree, then put a 6. Bhuvna, Hari is asking to share it again. Can you please share the file again?
Shared it again, and it's also there on the WhatsApp group.
Great. Yeah, keep scrolling the WhatsApp sheet, the Excel sheet. Yeah, there are a lot of statements. Just put the first thought that comes to your mind. Do not overthink. Do not think what it should be. Do not think whether this is I'm doing it right or wrong. Whatever you feel is true for you, whatever beliefs come into your mind about this thing, just put in whether you agree or not. Just put in on a scaling of 1 to 10. Yeah, Excel sheet has been shared.
If you scroll up on the chat box, I think you will find the file. You'll find the file. It's a simple XLSX file.
I'm seeing only from 9, statement 9.
No, that is on the screen. That is, you can download the file. You have to download the file, the Excel file, and if you put the rating against there in your mobile or on your laptop. Yeah.
Then you'll be able to discuss it when we go into the breakout rooms. So
yeah.
Yeah, give me because I just got it. So give me some.
Yeah.
Sure.
Not able.
I'm deliberately not scrolling it down right now because everyone will go at their own pace. So I don't want to decide the pace for you all. For some, it could be faster. For some, it could take
I'm trying to see how I can download because I'm not able to download it. It's just showing on my screen. But
you look at the chat box.
Yeah,
there is a message from Bhuvna, and there it says click to download. So on that XLS that is there.
Jacob, are you have you logged in from your mobile or from your laptop?
Yeah, I because of this I logged into my laptop now.
Okay, it should give you an option of downloading the file.
Money belief scale.xlsx. Okay, click to download.
Yes. Yeah, Bhuvna shared it again. Yeah.
Question number 26, is there a grammatical error?
1 minute.
Like, it's not right to make a lot of money than my parents?
Yeah, it's fine. It's not right to make a lot of money than my parents have made.
Do you agree? Give 10, right?
Yeah.
Okay.
It is not right. Sorry, you're right. It is not the right. It's not right. Yeah. So this one, number 26, will actually be it is not right to make a lot of money than my parents.
Bhuvana, can you please share the link? We just joined through the laptop, so we're not able to see the past history in the lab chat.
Sharing again, no problem. Here you go. Can you see it now? Did you get it?
No, we're not seeing the
Yeah.
chat.
It's shared now again. Bhuvana shared.
In the chat. Are you part of the 10 crore league WhatsApp group?
No.
No, okay.
Open the chat.
Box, can you open the chat box, please?
I opened it, but I'm not able to see the messages. The last one is what I have sent.
Your good name, please.
Palani.
Okay, I'm sharing one more time.
Yeah.
I'm not sure how to fix this. By the way. Did you get it?
No, I'm not seeing the chat.
Can you open the chat box?
Yeah, I'm opening. I opened the chat box. It's open only. The last one I'm seeing is from Narayan, Mr. Narayan. I'm saying, sorry, late attendance.
Yeah, just after that you can see.
Yeah, after Narayan's message, there is
No, I'm not able to see it.
the file.
Are you opening it on your computer or on your mobile?
Yeah, it's computer only.
I'm sending it to you on email. I have your email ID. I'm sending it to you. It will come from Kajal at plantoprosper.in.
Okay, sure.
Yeah, sure.
Okay, if you've done the activity, just hold it. I'll tell you what next to do. Once you're done in, type in done.
Done all 70 questions, all done.
Done all, very good. We'll wait for a minute more for everyone to complete.
It's some more time, 2-3 minutes.
Okay.
Couple of minutes. I'm halfway.
There are positive, neutral, and negative points. They are all kept in an order.
Designed in a nice way to get you thinking. So while others are still completing, those who have completed can share. How did you feel about responding to this? How did you feel about answering on the scale? What thoughts came to your mind? Good reflection.
Yeah, a lot of things. A lot of things in life. A lot of things in life about money has been expressed in all these 70 points.
Yes. Yeah.
I think people should analyze them not only physically, mentally, but psychologically also.
Exactly. Very good point there. Because sometimes the focus is all on the physical efforts, but the psychology behind it is also very important. Great. Mostly one, that's good. Going back to basics of money, rhetoric, fundamental questions. Yeah, almost all are self-limiting beliefs. Yes. They're done. Okay. All done? So what are these? These are all See, basically, these are all beliefs. Okay, they are all beliefs. And if you look at it, any of these beliefs can somewhere create some limitation in your growth. Now, beliefs are something which are not true or false. They are not good or bad. They are not right or wrong. They are just what you have chosen to believe around your world. And they come from whatever you have seen. So, like Hari said, it's mostly 1 for him. For someone, it could be mostly 10 for them as well. It's depending on what you are seeing about around yourself. What have you been conditioned to know and notice about money? So if I ask you one thing, I want everyone to type in the chat box. I'm putting a sentence. Complete this sentence. Money is dash. Useful, awesome, freedom, requirement, fantastic, rule for many achievements, tool, medium, needed, true asset, essential, fuel, responsibility, comfort, necessity, opportunity, fulfilling, power, not everything in life, mind game, financial freedom, mode of exchange, tool, easy, requirement. Wonderful. Medium for living gives me control, tool to achieve my dreams. Awesome. Means to some of my requirements. Good. I write the use of the word some of my requirements. Okay. Self-respect, benefit, fulfilling many desires. Yes. Money is power. Okay. Abundant, one of the tools to get happiness. Yes. Enabler. Wow. So money is important if it's wealth. Yeah. So money is what? Money is actually just a medium of exchange. The end goal is never about money. The end goal could be what you want to achieve. Let's say you want to have a comfortable retirement. You want to have education for your child. You want to have a retirement home somewhere. You want to travel the world. Money is going to be the means to achieve that. No, you don't have to submit this right now. Just keep it to yourself. I'll tell you more. If money is not God, then it is not less than God. Okay. It's a source to have a complete sense of living. Yeah. So money is one of the medium that can help you to get to the kind of living that you want. The aim when we say to become rich or to enter the 10 crore club, it's not about the 10 crores. It's about what you can do with the 10 crores. And I think over the previous sessions, we've already understood that what can you do with the 10 crores, right? What goals and dreams you can achieve, what protection you can give to your family, and how you can achieve your goals, your family goals, whether they are your responsibilities, whether they are your aspirations, whether they are your ambitions. Money is just going to be a medium to do that. Right? Let me give you one more sentence and complete this. Rich people are dash. Completed. Humble, very helpful, also wealthy, smart, privileged, money magnets, awesome, hardworking, living in abundance of time, grateful, smart, greedy, humble and intelligent, inspiration, powerful, time conscious, superb. Someone who knows value of each penny, having high net worth, they are givers, they are smart and intelligent, they are knowledgeable, awesome, they are disciplined. Time buying people, disciplined, great, great. Now, how does it matter what you believe about what rich people are? How does it matter? We are talking about your growth. We're talking about you getting on the path of the 10 crore league. How does it matter what your belief is about rich people? Does not matter. What if I tell you it matters? Benchmarking? Yes, it matters. How does it matter? Aligning our thoughts. So think about it. If you think that rich people are greedy, if you think that rich people are corrupt, if you think rich people are manipulative, do you identify yourself with being greedy, corrupt, or manipulative? No, right? Of course not. Then what's going to happen? If you believe that rich people are greedy and you don't want to be called greedy, what is your mind going to do? Is it going to help you to become rich, or is it going to stop you from becoming rich? It will stop you, right? Exactly. That is why it's important to understand what you believe about rich people. So if you say rich people are successful, rich people are awesome, they are money, they are time, they have abundance of time, they are knowledgeable, they are givers. Now, do you identify yourself with these kind of identities? Yes, right? So now what happens? Now are you able to relate to that? Now, if I say you have to become rich, then what? Now you want to be, yeah, I'm knowledgeable, I want to have the abundance of time. Now it's on the path to achieve that. So now let's look at what you did. Okay, let's look at all the 72 points that you answered. Actually, all of these 72 are somewhere or the other limiting beliefs. And beliefs are not right or wrong, they can only be either empowering or limiting. Now the point is, I want you to pick out the top 3 beliefs that you have where you have rated yourself more than 7. So I want everyone to just maybe filter that, sort that file and see that where have you rated yourself more than 7. Okay, Tamil Rasan says none. Okay, good. How many beliefs are there where you have rated yourself more than 7? Bhanumurthy. Oh, sorry. Your name says Tamil Rasan. Okay. 5. Okay. 2, 3, 4. 1. None. Okay. So you have rated yourself highest is 5. Okay. That's what I understand. Okay, fine. 2. Now think about it. Take those beliefs where you have rated yourself more than 7. Or if you don't have anything more than 7, what is the highest one that you have rated? If it's 5, take that number 5. And where is that belief coming from? Whether they are 3, 4, how many ever beliefs there are there where you have rated yourself high, I want you to kind of maybe close your eyes, think about that belief, and think about which incident in your life in the past has probably created that belief. Which experience? Yeah, there will be past experiences. Which was that most impactful experience? Missing out on some investments, okay. Scarcity, yeah. And now think about it. That particular incident created that belief. I want you to now pick on that incident, okay, in your life, whether it was something, it could be something that happened around you, or it could be just something that your father told you, your mother told you, some guru told you. Yeah, you saw your parents struggling on account of money, lack of money, finding the source from observation from society. Yeah. Now, whatever you have observed, think about it. Is that observation really true at all times? I want everyone to think. Yeah, no. I'll repeat. That incident which created that belief. Let's take an example. Let's take one of the beliefs. Okay, let's say that rich people aren't happy. Okay, number 49. I'm just taking that as an example. Rich people aren't happy. Okay, now there will be some incident that you know about some person whom you saw being rich, but he was not happy. Maybe he didn't have his family with him. Okay, and that particular incident created this belief in you that rich people will not be happy. Now, this will block you from becoming rich because you feel that if I become rich, I will not be happy. This is how the subconscious works. Even you may say, but there is no logic in this. Subconscious doesn't see logic. If you are believing in that, then sorry, it means that this is going to be an obstacle. So think about that instance which made you feel that rich people can't be happy. And thinking about that incident, just introspect whether that is always true. It was one incident that probably came to your mind that made you to conclude this. And now think about other people who may be rich and may be happy. Who may be rich and are following their passion as well. Who are not slogging and struggling to become rich. And you will find such experiences there. Yeah, there are lots of them, right? So think about it and type in the chat box. Are you able to get some contrary example? Even एक example भी होगा तो चलेगा. Helping others, yeah. Rich and happy don't go together, yeah. Is that really true? Have you seen people who are rich and also happy? It's not really true, right? Yeah, you've seen, yeah. There are many. So now, all I want you to do as a takeaway from this before we go to the investment philosophy statement is to introspect on this. Maybe we won't have time to do that completely right now, but after this session, I want you to look at all those elements where you have rated 5 or maybe 7 or more. And think about it. If I were, listen to this question very carefully. If I did not believe in this, what would be different in my life? Okay, think about it. If I did not believe in this, what would be different in my life? For example, someone may say it's risky to become wealthy. If I didn't believe in this, what would be different? And the person may say, I would have probably taken more risk and I would have been wealthy as well. Okay, this is a very, very important statement. Now, let me give you a small example. Everyone ready for a quick activity? Yes? Okay. Now, I want you all to, if possible, switch on your cameras, please. Let's have fun. Let's see each other doing this. Okay. Awesome. Now I want you all to look around in your room. Okay, look around in your room, whatever is in your visual space. Look around and notice all the things that are red in color. Make a mental note of everything that you can see around you which is red in color. How many ever things there are? Okay, don't type in the OER, just make a note of, mental note of whatever things are red in color. Okay, I'll repeat, you lost my voice. Make a mental note of all the things around you which are red in color. Okay, notice how many ever things you can notice which are red in color. Okay. All right. Now, close your eyes. Close your eyes and try to recall all the things around you which are blue in color. Now open your eyes and check how many things you got and how many things you missed out. What happened? I got 2, and how many you missed out? Are there more than how many you spotted? I'm sure there was more, right? I did not guess. What happened over here? This was a very, you missed more than what you spotted. Yeah, nice. This was not about getting it right anyway. This was just to show you what happens and how our beliefs are formed. Whatever you tend to believe, if you feel that rich people aren't happy, just as an example, what will you start seeing more of?
Negatives.
Yeah, negatives. You start seeing more, oh, see, one more rich person who is not happy. Maybe the same next person next to that person is a rich person who is happy, but your mind will not focus on that. Your mind will focus on the one who is not happy. All these things which you believe in, which that belief has formed based on that one incident which happened or a few incidents which happened in your life, your mind will start justifying and reinforcing that belief again and again. Because I told you, see the reds, even when you close your eyes, probably the reds first came up because they were your beliefs. With your eyes closed, when I'm asking you to think about the blues, it becomes that much more difficult to recall because you are not focusing on the blues at all. Now, what I would like you to do as a takeaway from this is wherever you have put more than 7 on your beliefs, start actively fishing for the contraries. Start actively finding out, this is opposite to that. This is one rich person who is happy. This is one rich person who is following his passion. This is one rich person who is a giver. Not a stealthy, not a... By the way, we use this word, he's filthy rich. What is that? I don't think anyone over here wants to become filthy, right? And if you have been calling people filthy rich and you don't want to be filthy, sorry, you will not be able to be rich. Because your mind has associated filthy and rich. Okay, so train your mind to see the opposites of what you have written. And before I hand over to Bhuvna, I just want to make one simple statement that when we talk about positive thinking is not about being blinded off and denying the facts. I'm not telling you that, no, that incident which you saw on the basis of which you have formed this belief is wrong. That was true. That incident did happen. That is factual. The meaning that you made of it was something negative. Now, suddenly that meaning is not going to flip over from negative to positive. Would you agree? Suddenly, if I tell you, no, start believing that all rich people are happy, it's not going to happen just like that. Until you start proving to your mind that, I spotted something which is opposite to this. So start training your mind to spot the opposites. And that is a good way to rewire and reprogram your money beliefs. Okay, so quickly, please type in the chat box, what was your key takeaway from this first part of the exercise? And then Bhuvna can take it over. Thank you. Red, blue things or the mind tricks us. Yes. Thank you. Focus matters. Thought provoking. Exercise helped to unfold a lot of beliefs which I didn't know I had. Superb. We see what we want to see. Yeah. Reboot the belief system. Great. Self-talk is important. Yeah. I need to relook at my beliefs and find contrary truths to reboot them. Yeah. Simple activity. Yeah. To rewire money thinking. Good. Recognizing misconceptions, having open mind, re-engineering beliefs. Awesome. Thank you. Over to you, Bhuvna. Thank you and all the best.
Thank you.
In designing your investment philosophy. Thank you.
Thank you, Manoj. I think that was brilliant. In such a short time, you were able to bring out something as profound as this. And I think for people who've been here, they can take back those money beliefs. And we kind of rushed this activity through, but they can take some time to go through it and reflect and find contrary beliefs and reinforce them. So I think that was brilliant. Thank you very much, Manoj. I really appreciate you taking your time and coming over here.
Thank you so much.
Yes. A quick thanks from all of us here. Thanks, Manoj. So, guys, are we ready to go in for the next section? Which is preparing the investment policy statement? right? Great. Okay, so you must be wondering what is this investment policy statement, and then what is this mind belief system that we did, right? So I hope you got the connections. Just in case you did not, let me repeat it. So what you want to do with your money will largely depend on what you believe, right? So we wanted to first address what you believe and then move on to preparing for yourself what you want to do with your money. So that this is an instruction that you give to yourself, to your financial planner, to your children, to your family on how your money should be managed. Okay, so if you're deciding do this and don't do this, and you have some strong reasons to saying what you're saying, I thought it made sense to reflect on that. Does it make sense to you? Going that way? Did it make sense? Okay, fine, that's all right. So let's do this. Okay, why do you need an investment policy statement? Now, I was inspired by wanting to do this session after I read a particular article. I had shared that article also on the 10 crore lead group, but I think nobody read it because there was no conversation about it at all. But I thought this was a superb article, and I actually wanted to take out snippets from that article to show it to you, but I realized that there's no way that I can change a single word in that article, right? So that article is word perfect, and it talks exactly what we want to hear. And this is an excerpt from a speech by Charlie Ellis on April 7th, 1988. Okay, so this is some 33 years old, whatever he said, and he is an MBA and PhD, and he's authored a lot of books and some big shot guy in investments and finances, right? Okay, so he's a Canadian, and it's an excerpt from the speech. And is it okay if I read out the whole article for you, because it will set that context? It'll set that context. Is it okay if I read out the whole thing? Yeah. Okay. So you can read along with me if you want, or if you think that the words on the screen are disturbing you, feel free to close your eyes and just listen to my voice. But this is what we're going to do. Okay. Investment policy does not enjoy much popularity. Almost everyone agrees that it is a good thing, but almost no one does anything about it. An extraordinary paradox prevails in the field of investment, particularly professional investment. The paradox is that 99% of all the efforts and energy and skill of investment professionals is devoted to a difficult, even disagreeable task in which they are very unlikely to be successful. And if successful, the success will be small and not long lasting. Meanwhile, they spend less than 1% of their time and effort on a task that takes very little time. It is not very difficult, yet is nearly sure of success and brings good rewards. The very hard, seldom rewarded task is to beat the market by outsmarting and outworking the competition. The relatively easy and rewarding task is to determine each client's real needs and then set reasonable goals and structure portfolios that can and will meet them. I plead with those who are not in the investment management field to have a greater degree of respectful distrust for those who are. Okay? They are wonderful people, they are brilliant, they are articulate, they have charm, they work very, very hard, and they have the best intentions. They truly want to win. However, they have misplaced their bets, and you, as their client, own the bets. I urge you to be cautious and skeptical. Moreover, I advocate that you do something about it. First, let me tell you a little bit about investment management. There are three ways in which you might try to achieve superior returns. One is physically difficult, two is intellectually difficult, and one is emotionally difficult. Warren Buffett, John Templeton, Warren Goldring, and a very few others have staked out the intellectually difficult way of beating the market. Intellectually difficult investing is pursued by those who have a deep and profound understanding of the true nature of investing, see the future more clearly, and take long-term positions that turn out to be remarkably successful. We admire them, but only in retrospect. At the time of their doing their best work, we see them as misguided. We do not want to do what they're doing because it's unpromising. Most of the crowd is deeply involved in the physically difficult way of beating the market. See if you don't recognize the physically difficult right away. They come to the office earlier, they stay later, they read a larger number of reports more rapidly, they go to more breakfast meetings, more luncheon meetings, and more dinner meetings. They are on the telephone making more calls and receiving more calls than all the rest. They carry huge briefcases home at night, determined to get ahead by reading more reports before the morrow. In every way they possibly can, they put enormous physical energy into trying to beat the market by outworking the competition. What they don't seem to recognize is that so is almost everyone else. So far, so good, guys. Being incapable of doing the intellectually difficult and reluctant about the physically difficult, I have set about the emotionally difficult approach to investing. This straightforward, untiring approach is simply to work out the long-term investment policy that's truly right for you and your particular circumstances and is realistic given the history of the capital markets. Commit to it, and here is the emotionally difficult part. Hold on. Know your long-term goals, know what your limits are, but be careful. Most people approach investments as if the right solution was mathematical and their investment objective rational. The objective factors are usually not the most important part of the best investment policy. Experience teaches us that the subjective and emotional factors are usually more important because the emotional errors, buying too high because of excessive confidence or selling too low because of excessive anxiety, do more harm than rational errors. So you need to know as well, what is your emotional situation and what are your emotional constraints? What riskiness can you live with and live through? Can you hang on when the pressure is most intense and the data most compelling that you're clearly wrong? If not, recognize your own emotional realities and learn to live with them. To become a superior client, you will want to study and understand the capital markets, how they behave over the short term and long run. So you will never be surprised or shaken by their future behavior. Benign neglect is vital to superior clienting. Select the managers you admire, respect, and trust as human beings. Be sure that each manager understands your specific goals and your specific limits. To do this, you really must put it in writing. Insist on regular and formal meetings. Commit yourself absolutely to the discipline of setting and adhering to sound policy. Avoid the many fascinating, enticing distractions that are so prevalent in investing, and you will avoid a lot of trouble. In this way, you can assure the achievement of truly good performance that really does meet the real goals of your specific fund. If you're not able to sit down and write out in an hour's time what you're trying to do with your portfolio and how you intend to do it in such a way that a competent and able professional could take those instructions and fulfill them, you should at least consider making a serious study of your objectives, your risk aversion, the nature of capital markets, your cash inflow and outflow, and the design of your investment policy that is truly right for the long term for you. Being a superior client is not easy. It means taking an important responsibility and doing the work. But this is one investment that is guaranteed to pay off. I urge you to make the investment. Does it make sense? Does it make sense? Or was it a lot of content? So very quickly, what he's saying is there are three ways of getting superior returns. One is the physically difficult way, which is poring over the numbers, then the intellectually difficult way, which is seeing the future, or the emotionally difficult way, which is writing out your investment policy and sticking to it come what may, right? And the point is that most of us, though we think it is nice to have an investment policy, don't have an investment policy statement. Even as financial advisors, we don't have it for our clients. And many times as financial advisors, we write the investment policy for our clients, which I don't think is the right thing because an investor should write the investment policy for himself. Yes? Okay, so that's the background of why we said, okay, we all have to have an investment policy so that you are clear in your mind why you're doing what you're doing. And then after this investment is over, it becomes a breeze for you to manage your money. Does that make sense? So should we go into making the investment policy statement? Yes, Ritu, I will share it again on the group. Yes. Okay, great. Okay, so I hope all of you have a piece of paper and a pen. Okay. As we go through this, some parts might get technical. Just hang in there with me. I'll try to make it as simple as possible, but we should be able to get through with this quite comfortably. Okay, so I want to acknowledge a few people. I went through a lot of content online to see whether there is a ready-made investment policy that we can just take. I wasn't very successful. Mukul Agarwal and me worked on this together. Somil helped me quite a bit on putting this together. Shailesh Gadre gave me a lot of inputs from Nick Murray's investment policy statements. And Oliver helped me go through the document and review the whole content of the document. So it's been an effort of about 4 or 5 people. I've not seen an investment policy statement anywhere else. So it's probably one of the first that you're seeing in the country. I'm okay. It's not probably perfect, but it covers, I think it's as comprehensive as it can get. Okay. So there are about 15 things that you take care in an IPS, about 15 odd things that you take care or you put it out in an investment policy statement. Okay, so can we write it down? If you can all write it down along with me as we go through each of them, I think then by the end of this session, you will have an investment policy statement. I'm going to send you the Word copy or Word file of the investment policy statement where you can just fill in the blanks and complete it. Okay, if you do this activity with me, this next 45 minutes will be an investment that you'll make for your life. Are you with me, all of you? With me? Pencil, paper? Yes, great. Yes, okay, good. Okay, so first thing, imagine you're writing this investment policy statement for somebody you don't know. Okay, so imagine that you're just going away somewhere for 10 years, you're leaving your money and the investment policy statement for a very competent advisor who will pick up the IPS and just as you have instructed, get you whatever returns that, whatever results that you want. So that's the background. So just remember, if you want to mute yourself, that'd be nice. Yeah. Feel free to ask on the chat box. Okay. So you're giving your background, your age, your nationality, your residency, your education, your profession, and details of your family in this document. Okay. This is not very difficult. You're just giving, my name is so and so. I was born here. This is my this is my nationality. This is where I live. And this is my educational background. This is where I work. And in my family, there are these people. This is to let your financial advisor know what your background is. So far, so good? Yeah? Okay. We're just warming up. Okay? We're getting into more technical stuff. Tell me if you're okay. This part is okay? Okay. So the next one, we get into details of your current wealth, of how much wealth you have. You can include all of your assets, whatever you think are your assets. We're not going into understanding whether your house is your asset or car is your asset. We've done that part. You know what your wealth is. What is your current wealth? Where is it invested? And what are future investment plans? So you can say things like, I'm retired. I don't intend to invest anymore, but my current wealth is worth so much and this is where I've invested it. Or current wealth is so much and I've invested in these places. And I hope that I will keep on investing till my retirement age. And this is the quantum of my investment expect. This is the next level. So that an advisor gets to know how this can be planned, or you yourself know how to plan it. So far, so good. Are we good, guys? Yes. Okay. Next one. What is the emergency corpus that has to be maintained at all times? First things first. What is the emergency corpus to be maintained at all times? You can simply say, I will always keep 25 lakhs in emergency, or I will always keep 2 years living expenses. So whatever you want to say, mention all time emergency corpus to be maintained is so much. Simple, easy so far, no problem. Life events to be funded in the next 1 to 3 years. Life events to be funded in the next 1 to 3 years. So it can be repay loans, or my children's education is happening, or a wedding is coming up, or I want to start a new company, right? So whatever you think will be life events in the next 1 to 3 years, and how much money you'd like to keep aside. Next 1 to 3 years. So we're just taking care of first things. Emergency money has to be kept aside, and money that you need for key life events have to be kept aside. So we're on step 4. Are we good? Okay. Next is that the money that you've kept aside for long-term investment. Okay, now whatever you've kept aside for emergency and whatever you've kept aside for your key life events are not wealth creating money. They are kept aside for specific purposes and they will get spent, right? Now you're moving on to how is your long-term wealth going to be managed? What is your objective for long-term investing, and define your long-term. Every has a definition for long-term. For a day trader, 1 week is long-term. For a long-term investor, 100 years. For somebody like Warren Buffett, 80 years is long-term, right? So define your long-term. Example can be, my objective for long-term investing is regular cash flow generation or wealth creation or retirement planning or financial freedom, or it can simply be estate creation for the next generation. That's also fine. Whatever is your objective for long-term investing, define the long-term. I'm okay to invest for the next 3 years, 10 years, 35 years. Yes? Are we good so far? We're just warming up, guys. Yeah? Amit, you have a question? Not so good? Okay. Okay. What is expectations? Can you mute yourself?
I think there's too much of disturbance in the background. If somebody is not on mute, it will help if you go on mute.
Yeah. Kajal, would you like to mute everyone and then unmute me? Okay.
Yeah.
Okay, I think, okay, you can hear me, right? Okay, what are return expectations from your investments? And what is the maximum risk that you can take? Now, it's going to be difficult for you to answer this question. You might need some more information to answer this question. So what is the return expectations from the investments that you're making for the long term? And what is the maximum risk that you can take, which is the maximum loss that you can tolerate on your investments? Okay, your example can be, I want risk-free return. Or you can say, I want 2 times risk-free return. Or I want 3 times risk-free return or more. Only then it makes sense for me to make an investment. Whatever is your return expectations that you have from your investments. And what is the maximum loss that you can tolerate on your portfolio? Now, just to help you make that decision, here is a little perspective. Risk-free rate is 5%. Let's assume risk-free rate is 5%. If you're expecting a 15% risk-free rate over a period of 7 years or 10 years, right? Or 5 years or 3 years, remember, this is the loss also that you should be able to take. Now, if in the next 3 years, you're expecting more than 3 times risk-free rate, your only option is equity. And if you invest, I'm saying only option is equity, tomorrow you can say crypto, okay? So just for perspective, I'm giving you, you can replace any asset here. It can be equity or the other asset classes that you have. But just to give you a perspective, in a 3-year, 5-year, 7-year, 10-year period, an equity return can be as less as -15 to as high as 55. So if you want a 55 and you want a probability of a 55, there is also a probability of a -15. Okay, as the years go by, you can see that both the bottom side and the top side are getting, easier, right? So over a 10-year period, you will never have to suffer a negative return, and the maximum return that you can expect is only 20%. Now you might ask where this data is coming from. So this is data from the past. Obviously, every decision in the future is made based on data from the past, and this is daily rolling returns of the last 25 years in Nifty 50. Somil helped me put this together. So thank you, Somil. So, and a few more other probabilities also that you are going to see. So this is what you should expect in terms of return expectations from your investments and the maximum risk that you can take. So when you have a higher return expectation, there is some amount of risk that you will take, just for perspective. This clear so far? Are you guys okay? Just give me some feedback, because the first time I'm doing this and I'm just getting anxious. Yeah? So far, so good?
So far, so good.
Okay, so what is the liquidity that I need in my portfolio? what is the liquidity that I need in my portfolio, which is at least 40% of my portfolio should be liquidatable in 3 to 5 days. That can be a requirement, right? Just to make sense, I give you an average time to liquidate. If it's listed equity, 3 to 5 days. If it's traded debt instruments, maybe 1 to 3 days. If it's FDs, bonds, debentures, then maturity date is when you will get the money. Physical gold, in a few hours, you can go and get money. Gold ETFs, funds, bonds, 3 to 5 days. Real estate, 3 to 6 months, depending on price. Right? So average time to liquidate, just for your understanding. How much of your money should be easily liquidatable? So this is what will give you comfort. If all of your money is stuck somewhere, would you be comfortable about that? Right? Or you'll say, I don't need all of this money. I have about 3-4 crores. I'm okay with having 2 crores in something that's locked in also, no problem. So here you say at least 40% of my portfolio, at least 20% of my portfolio has to be liquidatable in 3 to 5. Yeah. So the liquidity profile, your personal liquidity profile is what you are defining. The next one is the core portfolio asset choices, allocation instructions, and product choices. Now we're getting a little more technical. Most of you will be able to capture this. So here what most investors try to do, specifically if your investment size is large, so you do a core portfolio, and then you create satellite portfolio. You can do it. If you don't want, you don't have to do it. I'm just giving you a perspective. If you say that, all of my money goes here, that's fine too. So core portfolio asset choices, allocation instructions, and product choices. I've given you an example here. Core portfolio, I want equity, debt, gold, and real estate. My allocation can be 60% to equity, 20% to debt, 10% to gold, and 10% to real estate. And in equity, I want to choose blue chip stocks and mid-cap mutual funds. Okay. Real estate can be invested through REITs. When I say real estate investment trust, which are like mutual funds in the real estate space. Right? Gold can be through sovereign gold bonds. So you can say what you want to say. Gold need not be sovereign gold bonds, can be physical gold also. Real estate can be some rental property that you have somewhere, that's also okay. Want 30%, choose. But be clear what you want in your core portfolio. And what you have to also understand is this allocation will determine the return. This allocation will determine the return. Okay. So we'll just look at some examples here. Example is, let's say your expected return is 2 times risk-free, 2 times of risk-free return. So 5% is the risk-free return. You want at least 10% on your portfolio. The maximum drawdown that you can tolerate is 10%. And the time period of investment is 5 years for you. Okay. To get this return or this within this constraints. So if you want a 2 times at least risk-free, at least 60% of your money has to be in equity-based investments. Only then you will get at least 10% return. The max drawdown has to be 10%, which means at least 40% has to be safe. And that's exactly why your max drawdown 10% constraint is taken care of. And then if your time period of investment is 5 years. Now, what you have to look at is what are the probabilities of success? In a 3-year, 5-year, 7-year, 10-year period, if you have a 60% allocation to equity, these are the chances that there is a 5% chance of you getting less than zero return in a 3-year period. There is a 19% chance of you getting a more than 15% return in 3-year period. Okay, so just to give you that perspective, in 5 years, there's a 78% probability of getting more than risk-free return and a 38% probability of getting more than 10% return and 0% chance of loss of capital. This is information, okay? I want you to know that this is not advice. This is information. This is data from the past. In the past, we're making a projection into the future, assuming the journey will be very similar. But what I want you to know is if you have a 10-year time frame and with a 60% exposure to equity, there is no chance of you getting more than 15% return. Okay, there's no chance of you getting more than 15% return. Your returns are most likely 99% chance of you getting anywhere between 5% and 15% return. There's a 99% chance of you getting between 5% and 15% return, and there are no chance of you losing capital with an asset allocation like this in a 5-year, 7-year, and 10-year period. Okay, I'll give you one more example just to make sense. return is 3 times risk-free return, max drawdown is 30%, and time period of investment is 10 years. So let's assume this is somebody who's more aggressive, right? So let me pick up Harsh, okay? Harsh Shivhare has a very aggressive investment portfolio. He's young, he's got time on his side, and he likes equity, 3 times risk-free, and 30% drawdown is something that he can tolerate, and he might need something like 90% exposure to equity to be able to get 15% return. Okay, 15% return, 90% chance, 90% equity is what he will need. But what he will have to know is in the 10, if he holds the money for 10 years, there's a very good chance, even then getting more than 15%, there is only a 27% chance of him getting that kind of return. But there's a very good chance, there's almost 0% chance of him getting negative returns. And even less than risk-free return, there's a very, very negligible chance. So he will 100%, almost 99.9%, he will get returns more than risk-free return, and a very good 99% probability of getting, yes, of course, 5% plus, and 71% probability of getting a 10% plus IRR. Okay, so the probability play that you have to really understand how markets work. Is it making sense? Is it making sense? So based on this is how you draw up your preferred asset allocation, saying, okay, I'm going to be okay. It's not about choosing the asset allocation. After you've chosen the asset allocation based on your return requirement, after that, you know what is the risk that you're taking on. Okay, I want a 15% return on my portfolio. And because I want a 15% return on my portfolio, I have to stay invested for at least 10 years. I don't want to lose capital. And there is only a 27% chance of me getting 15% return, and I'm okay to live with that. I'm willing to play that game. Okay, I will not lose out on this. Got it? Yes, these are all nifty returns of the past since 1996, 25 years daily rolling. Is this clear? Did it even make sense? Is this making sense, guys? Yes, yes, Banu says yes. Okay, very much. Deepak says yes. Okay, 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 good. Okay. Now this is how your core portfolio is constructed. Okay, you're saying I want 60% exposure here, I want 20% here, and I know what the risks are, and there is a chance of me losing capital. I'm okay with that. Okay, that's your understanding. That's what you, and based on this is what you're giving your client, your advisor instructions. Then you can also choose satellite portfolio options if you want to. Okay, we're not saying you have to, but you can choose. This is what most wealth management. Sorry. Okay, I'm sorry. It's going. Okay, so the part that's going above your head will get you some help. Don't worry. The next part is after you've chosen your core portfolio, then you choose if you want satellite portfolio. So you can choose to have 5% of your money exposed to some day trading, or 2% money to crypto, or whatever. So this, you make a decision based on your understanding. I'm not recommending all of this. Some people do it. If you want to do it, you can do it. But preferably a core and satellite portfolio is best suited only after your portfolio size is beyond 5 crores or more. Okay, 5 crores, 10 crores, whatever. Okay. Now, the next one is how to respond to changes in market conditions. So you want to tell your financial advisor how to respond to changes in market conditions. Okay, you can give them these instructions. You can tell them, do not respond to changes in the market condition. Market mein jo ho raha hai, just leave it. Stick to my asset allocation. Don't make any changes. That is one way of doing it. Or you can say when markets go up, do this, go down, do this. You can give them certain instructions. So this is some things that people who understand do. If price to earnings drop to 40%, drop my equity exposure to 40% if P goes beyond 25. If market cap to GDP goes more than 120, right? Market MGDP. So market cap to GDP is a ratio that's used for valuation of the market. So these are some instructions that you can give if you know it. If you don't know it, you can just say, do not respond to changes in the market condition. Okay. So just to give you some perspective here, there are mutual funds that make changes according to market conditions. Okay, these mutual funds are managed by good fund managers, and they do it very scientifically, right? Let's see what happens and what is the result of doing these changes or responding to market conditions. Okay, there are these funds called dynamic asset allocation funds that make changes based on this PE multiple or the NGTP ratio. They will adjust equity allocation 40%, 60%, 80% if PE While valuations are very good, if markets fall, they will increase exposure to equity. If markets raise, they will reduce exposure to equity. They'll do all of this. And this is the kind of result. It looks very interesting. It's all fun thing to do. It's logically, it's making a lot of sense. Academically, it's a very sensible thing to do. But what you need is proof of the pudding. Okay, so this has been the returns that these schemes have given over the last 1 year, 3 year, 5 year, 7 year period, right? And this in comparison with equity funds. In comparison with equity funds, please mute yourself so that we can all hear what he's saying. This in comparison with equity funds, you see that they have largely underperformed equities. Now, you still want to do it, go ahead and do it. It's my responsibility to tell you this information. Any financial advisor's responsibility, this perspective to give you, right? So after seeing this, you might say, do not respond to changes in market conditions, or you might still say, no, I want some fun. I want to catch the wrong side of the market cycle all the time. Go ahead and do it. Go ahead and do it. Okay. The next one you will clarify is the reporting periodicity and the information to be covered. So you can say, I want my reports coming in to me every 3 months and with details of how my portfolio is doing against markets, against benchmark, against my own personal milestone, right? If I should have reached 1 crore now, how much have I reached now? So give me a particular, so you give exactly the information that you need in your report and the period of your report, and under what conditions will the IPS be reviewed? Okay. And then finally, an acceptance to pay the cost of management and undertake the risk involved. This is what an IPS covers. Okay. I'll share how an IPS looks. And is that even making? Okay. So this is the IPS document. You can read this. So to my very competent financial advisor, I'm going to send this out to you. And if you have been following what I've been saying, then you'll be able to fill this out very easy. So I have built a wealth of so much, which are invested in this manner. I will be earning and adding to this wealth a sum of so much over the next year. I would like my money to be handled as per instructions given below. At all point in time, I would like to maintain an emergency of so much. In the next 3 years, I will need so much money for some key life events. Rest of the money is to be invested for long-term wealth creation. I will invest it with this money. Hello? Am I audible?
Yes, you are.
Yeah. Hello? Am I audible? Yeah. Okay.
Yeah, you are audible.
My objective for investing in. Okay. My objective for investing is this. So much money has to be in my core portfolio. My expectation from this investment is that it earns so much money. The maximum loss that I can tolerate is so much. At least this percentage of my investment should be easily liquidatable. All proceeds should be credited to this bank account number with my bankers. I understand to achieve the above investment, the portfolio has to be built like this. You can say, I would like to tactically change the asset allocation as follows. The preferred products for investments are these. So much percentage of my assets can be considered for investment in my satellite portfolios, right? And I'm okay to consider the following avenues for satellite portfolios. My expectation of returns from the satellite portfolio is so much, and I can tolerate 100% loss on this. That's what you should say. I understand that with this allocation, the probability of losing capital is so much, the probability of getting risk-free return is so much, and the probability of getting my desired return is so much. Okay. I understand that these are only probabilities based on past data, and I expect a report of my investments with details or whatever you want sent to me every quarter or every month. I expect a personal review meeting once every year or every 6 months, and I understand that the cost of planning, management, and servicing would be so much, and I agree to pay in advance, blah, blah. I fully understand the risks involved, and I agree to take responsibility for the outcome of the above process followed in letter and spirit. This investment policy statement is valid till any changes are made to it. Right? So this is the investment policy statement. If you can manage to put it together, then this becomes a blueprint for you to make future decisions. Was this easy?
What were points number 13 and 14? The statement?
Sorry?
Points
Sorry to say that again.
13 and 14, because I didn't get it. 12, then we jump to 15.
Oh, did we? Okay. So points 13. Points 13 were important, right? So let me repeat that for you. So point 13 was my satellite portfolio options to be considered. What are satellite portfolio options to be considered?
And 14?
14 is how to respond to changes in market conditions. This is very important, right? How, if markets condition. So you're assuming that you're leaving the money and the investment policy statement to somebody and going away for 10 years. And if markets move up and down, what should they do? Give them clear instructions, right? This is making sense, guys. I'm happy to send this statement, the investment policy statement that we put together for your use. Okay. If you need help, okay, if you need help to put this together, we have some really amazing financial advisors in our group who we can, come around, take you around. So some of you were telling, right? Ramya was telling me a lot of this is going over my head. So you might need a little more help with understanding these numbers so you can come up with something. So we can organize a 30-minute complimentary session to go through the IPS that you prepared and look at the probability so that you don't have something that's unreasonable, right? Saying, oh, I need 20% return, but I will take zero risk on my capital and I need the money all in one day, right? So you don't make these unreasonable requests. So that your IPS is at least making sense, so that there is a very high probability of you getting what you want. You can write what you want to there, but if the probability of getting something like that is, let's say, 5%, then what's the point, right? Yeah. So this is what I wanted to share. Mukul, are you here?
Yeah, I'm here.
Hi, Mukul.
Hi.
Mukul, you want to just take us through your IPS? Could you put it together?
You want me to put it right now?
Yeah, you can in the same document. I can take you through it.
Okay.
Yeah, or anybody else who managed to put it together, I'm okay, guys. If anybody put in the data, because me and Mukul were working on it, I just called them. So Mukul works, he handles Circle Wealth and he's a very dear friend. Anybody else who wants to just walk through their IPS, if you had put in information along with me, did anybody manage to catch up with me and put it together? I can take you through it.
Yeah, we would want somebody to volunteer. I mean, this will mean that, there would be some personal information, which, you not necessarily you have to give the accurate information. It's just basically exercise so that everyone understands how to fill in this. So does someone want to volunteer?
I don't mind, Guna. I can do that, but I not filled in, but I know vaguely.
Great.
Yeah. So shall we go through this? Well, you don't have to necessarily give me PAN number and primary bank and all that, but otherwise,
I will obviously
you can see this on the screen. It's simple to understand. Does it even make sense? Yes, you go through this. Can you read it from screen, Jacob? Just filling.
Yeah, will it be okay if I just talk in terms of percentages, not exactly what the number is?
I think we lost Bhuvna. Her connection is low, I believe. Mukul, could you please just take over?
So, Jacob, the idea is that we do this exercise, a mock exercise, and everyone is able to understand what to be filled. So essentially, wherever there are numbers to be filled, let's fill in the numbers, the right numbers. I mean, you need not put in your actual true wealth, right? You can just put any number.
Okay, do one thing, then you can choose the number. So we'll start with, assume that there is a certain network, and then we will just talk, you can say, take 1 lakh, 20 lakhs, 100 crores, 1 crore. that is your choice. And then I will talk about the rest.
Okay, so let's take a 2 crore thing. That the portfolio is 2 crores.
Yeah.
And let's take it as a base and then move forward from there.
Yes.
So is Bhuvna joined back or no? I don't think so. She is.
I think she is losing the connections often.
She's joined back. I'll just check it.
Okay.
A little patchy.
So Bhuvna, we just discussed that we will Jacob will do this role thing, and we are taking that 2 crore as a base portfolio value, on which now he will put all the things.
Okay, sure. Yes, Jacob. Sorry, guys. We just finishing this and then we are off for the rest of Sunday. Okay. Just wanted you to know how the whole thing will sound if it's put together.
Yeah.
So where do I start?
Jacob, yes. You can start with, I will be adding. So from here, this is okay?
Okay. So I'll be earning and adding to this wealth a sum of, say 10 lakhs, 22 crores. Okay, 10 lakhs. And I would like them, at all point in time, I would like to maintain an emergency fund of, say, 5 lakhs.
Okay.
In the next 3 years, I'll need, I prefer to take no risk minimum, say 20 lakhs.
Okay.
Rest of the money is to be invested for long-term wealth creation. I'm willing to stay invested with this money for a period of, say, 10 years.
10 years, okay.
Yeah, my objective for investing in order of importance is...
it can be cash generation.
Yeah, basically, yeah, it's part of the long-term wealth. It's part of estate creation.
Okay.
Bhuvna, may I request you if you can write it over here, type it, so that, once Jacob is done with it, then we can quickly read through it and, then we'll get a perspective how it is looking actually.
Okay.
Yeah.
Yes.
Long-term wealth, estate creation. So this part is not to be used for the regular day-to-day living, correct?
Yes, this is money that you're giving away, and this
Yeah,
is wealth.
okay. Estate creation, long-term wealth, yeah.
Okay. You want a core and a satellite portfolio, or would you just stick to 100% of my wealth in core?
Yeah, the core will be, say, 80%, and 20% is the satellite. So expectation from this investment is that it earns 15%, 1.5.
Okay.
The maximum loss of the investor should not exceed, say, 20%.
Okay.
At least if it is 2 crores, then I mean, randomly you put, say, 20%.
20%? Okay.
Yeah.
So this is okay. Okay. You're a dream client, Jacob. Yeah.
Yeah, it's easy client, right? Yeah. So investments in a major following assets. So this is again percentage. I can say equity 60.
Yeah.
Debt maybe less, gold maybe 10%, real estate 25%. That is 5%.
Okay.
So 65, 10, 25, something like that. So equity is 60, I said, 60.
Allocation.
Hello, Bhuvna, are you there? I can't hear you.
Yeah, now Bhuvna is back, yeah.
I would like to technically change the allocation as well as if, okay.
Would you like to?
I don't know, I leave it there. I think that advisor can decide. The preferred products for investment equity would be a mix of large cap, mid cap, and small cap.
Futures.
Large cap,
mutual fund or stock?
Yeah, large cap. I mean, whether it's mutual fund or
Mutual fund.
individual stocks, it's okay. Both are okay with me.
Okay.
Large cap, mix of all the three: large cap, mid cap, and small cap. Say between 70, 20, 10.
Okay, super.
Okay. Yeah, 70, 10, 20, 10%. Yeah.
Okay. Okay, you
Debt,
can fill this up.
debt preferably low duration. Low duration. Yeah.
Okay. Gold.
Gold, sovereign bonds, ETFs.
Okay.
Yeah. Real estate is probably.
All your rubber land.
Yeah, not rubber, not in land. Maybe more of residential.
Plots.
Yeah.
Okay.
Not plots, residential buildings or apartments.
Okay. Okay. So now we have
Yeah, that I said 20%.
80%, right? 20%.
Yeah. Yeah.
What options
so
do you want to
this I will do a little bit of futures and options, F&O.
F&O. Okay.
And what else is there in this?
Whatever, small caps or thematics or cryptos or angel investing or
bit of cryptos. Bit of cryptos, yes, we can try it out.
Okay.
And
yeah, this is
maybe some kind of private equity, that kind of thing, like private placement, like small venture companies. Yeah.
Okay.
Satellite portfolio, my expectation is obviously going to be higher, right?
Yeah.
Say 40% or 35%.
That's all? Okay. That's very very low expectation.
Then make it 50, yeah. Make it 50, just to.
I would say 1,000. Okay, just joking. Okay, maximum loss of capital that I can tolerate on this
is 30%. Or 40, now the 40 crore, because that's more realistic.
Yes. Okay, so ideally, this will come out of.
Ideally, when you're expecting a 50% return, then the loss on capital can be, as high as 100%.
Yeah, I know.
Yeah.
So we'll see. The probability losing capital is.
Yeah. Okay.
So what is that? What is that? Fill up. Bhuvana, you have to tell me what's over there. Probability losing capital is.
Yeah. So that we will have to run the numbers.
Yeah. Okay. You're going to work it out. Yeah.
Yeah. So I expect a report of my investments with details of whatever performance reports you want.
I think every month, every quarter, something like that. Maybe every month, because trading and all is there, right?
Okay. With the details of performance against targets.
Benchmark. Against targets.
Benchmark. Okay. Correct.
You
expect a review meeting once every year?
Every month.
Every month? Wow. Okay. The reports will be sent.
Is it too infrequent or too frequent?
Way too frequent, right? I don't know. It depends on your advisor. If they're okay to come and do a meeting every month, that's amazing.
Yeah.
They'll accordingly, cost will go up. That's all. So you make a decision based on that. Right.
Okay, let me hear about the cost now. Understand the cost of planning. That's what I'm interested in. I just wanted to know. I know this group is full of financial advisors.
Good, great. Okay, so this is how you make that. Okay, so Jacob, how does it feel for you to put all of this together?
How does it feel?
In one document. Yeah, how does it feel?
Yeah, it's nice. It brings a lot of clarity, because I think a lot of scattered thoughts are captured together. So it becomes a little more concrete now.
Concrete now. Okay.
Yeah, otherwise it's just kind of in the cloud,
Yeah. Good. So this is a document you can take a printout of, sign it, and give it to your family and your financial advisors and to yourself for reference. What did I think? What was I thinking of, right? And it's something that you can stick by. And the the beauty of this is in your ability to emotionally be stable to stick by this. That is when real returns happen, right? So this is what we wanted to share with you guys. Your investment policy statement draft is coming your way by email to all those people who are here today. You've registered and you will get it. Thank you, Jacob, for being such a sport and for volunteering and being there in the sessions. And any other feedback, guys? How was your session? I don't want to take too long. It's 5:10 and we have to close. So how did you enjoy today's session? Was it good? Did you take away something from here? Jacob is always awesome.
Thank you.
Yes.
Okay, thank you. Thanks, everyone. Thanks, Jacob, for doing the role play. Bhuna, very interesting session. Thank you very much.
Thank you. Can you all put one takeaway from the session? One takeaway, just one takeaway, and then we are closing. Just one takeaway. Any one thing that you took. Yeah. Any one thing that was useful for you. Harsh says belief. Yes. Thank you, Bhuvna and team, for very interesting and helpful session. Great clarity. Okay. IPS was useful. Okay. Understood that we should have a IPS. Yes. Drawdown percentages was interesting. Okay. 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 IPS is Bhagavad Gita. Yes. Take away clarity and IPS. Okay. Get clarity on belief system and the IPS. Think positive about rich people. Think positive about rich people. Okay. Yes. Belief systems. Yes. Good. Great. Thank you very much, guys. Okay, so announcements for the next 2 months we have on popular request. We might have Harish coming over for the next session. I'll confirm that to you for a session on futures and options, and another one on the way. I cannot give you too much information, but something on crypto coming up for August, right? So stay tuned. And Kajal, do we have the Telegram link to join?
Oh, not yet. I'll send it on the group. I'll just send it.
Okay, so for people who are not in the WhatsApp group, we'll send it out by email. For all of you who've registered today, I'll send out the Telegram link to join by email, and the WhatsApp group, we will be sharing it today because I think we're still figuring out how Telegram works. Okay, so is that okay?
You'll be sending this
IPS document.
IPS that thing. Yeah. Yes, no, even that presentation, you're sharing that presentation also, right?
Okay, I'll share it. No problem.
Yeah. Thank you.
Okay. Thank you. Thank you very much, guys. And thank you so much for joining, and have a great June. Enjoy monsoons. Get vaccinated. And
Thank you, Bhuvna. Thank you, Bhuvna.
Thank you, Vijay. Thank you, Subodh.
Bye. Thank you, Bhuvna.
Thank you, Deepak. Thank you. Nice to see you all.
Bye-bye, guys. Stay safe.
Thank you. Stay safe, all of you. Yes. Bye, Mukul. Thanks for helping. So for those of you all who want, okay, so I'll share that information on the group. So yeah, on advisors, you can reach out to if you need to. Okay, bye.